Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is a daily analytical report with Alpari. So we will discuss about the situation on the market, both from the fundamental and technical point of view. As always, let me show you the market calendar because, the market calendar now is empty. So the market is looking for other influential information that can move the charts. And actually this information that market found was yesterday's speech from Donald Trump. First of all, we had an article on the Politico, which is one of the biggest portals about American politics, which said that Trump's administration, experts from Trump administration negotiated with congressmen, with legal advisor from the Congress, and they found kind of an agreement over the tax reforms, which was perceived as a very great thing. It was perceived as a great thing, and that is why American indexes went significantly higher. But after that, we got another information from Donald Trump itself. He said that he preferred to shut down the government in September than not to build the wall on border with Mexico. So he prefers to build the wall rather than avoid the government shutdown. And also he was talking about the NAFTA, North America Free Trade Agreement. He said that at some point probably this deal will be terminated. Because Mexico and Canada, especially Mexico, they are taking advantage of this deal over America. He said that they have made such bad deals, both of the countries, but in particular Mexico, that I don't think we can make a deal. So I think we'll end up probably terminating NAFTA at some point. I personally don't think we can make a deal without termination, but we'll see. Those two information about building the wall and about the possible termination of NAFTA were perceived negative, obviously, and that is why today we do have a correction of this positive sentiment on stocks, and we do have an escape to safe havens like gold. From the calendar point of view, also let me tell you a little bit about New Zealand dollar, which was hit by the own government, which cut the forecast for the economic growth. So New Zealand dollar in those main currencies in majors is underperforming right now. As for the calendar, you can see no tier 1 data this week is very we don't have any significant events apart from the Jackson Hole Symposium, which will start tomorrow. And actually these are the most important events. Apart from that, for whole week we didn't get any significant information, no tier 1 data. The situation will not change today. Today we're just having PMIs. As you can see, it came mixed. From Europe, we are still waiting for the PMIs from US. But I don't think it will change the situation much. Okay, so now we can take a look on the charts. Let me start with 4 instruments. Well, 3 of them I mentioned yesterday on Trading Sniper. I mentioned those today as well, but I added also one. So we will start with the instruments, which I talked about on the trading sniper video, because it all worked. On cable, we set potential support here. We marked this with a checkpoint here and with this rectangle. This checkpoint is, well, this support is a combination of a few important supports. So what do we have here is 38.2 Fibonacci level, a retracement of this uptrend. It's also a horizontal support. Well, actually, it's much longer than that because it is a support from July 2016. It's a resistance from December 2016. It is a support from April 2017, May 2017. So it's a very, very important horizontal support. Apart from 38.2, as you can see, previous price action here also counts. What do we have here is also potential correction equality pattern, which is already set right now. So this correction was 462 pips more or less. This one is already 474. So this correction is a bit longer, but it's not a pharmacy, so we can have like correction 10 pips bigger or smaller. Cable is having now or never situation. So if buyers want to bounce, if buyers want to take the control over right now, they need to act now. They need to reverse right now. If they won't use this opportunity for a reversal, the chances for a breakout will increase, even despite the weaker dollar, because American dollar is weaker now. It's not helping. Fortunately for the buyers, it's not helping the situation here, which shows us that now demand is very weak. Next one is S&P 500. We are telling you yesterday about this hammer on a daily chart, which bounced off long-term uptrend line, because this uptrend line started at the end of 2016, at the beginning of 2017. And that hammer was a very positive sign. After this hammer, we are somewhere here, and we said that, well, that's a nice signal to go up, and the price went significantly higher. Now we're just having a typical small correction. So this information that we got today about this wall and about terminating NAFTA didn't affect the price of S&P 500. Affected a little bit, but it's not so strong. So still we do have a buy sentiment here, we do have a positive sentiment, and we do have a buy signal on S&P 500, no doubts about that. After the time of very low volatility, we finally have some big market movements. That was a huge movement, that one, and reversal was big as well, almost 1%. Gold is going higher. Gold is benefiting from this situation, but is also benefiting from the failure of sellers to break this horizontal support. So one more time, a whole story from the very beginning. Shooting star on a daily chart, bouncing off a psychological barrier on $1,300 per ounce. Normally it should be a strong sell signal. It was on Friday, but on Monday traders were resistant to this signal, and actually they went significantly higher. And now we're having a kind of a sideways trend, but from the technical point of view, it looked like a head and shoulder formation, right? So we had this neckline on green area, green horizontal support. And we said that it's a great place to buy It's also a great place to watch, because in case of a breakout, that would be a great opportunity to sell. But the price decided to bounce, and we marked this rectangle yesterday, and actually from this rectangle the price bounced. Why this rectangle was important, why we put that on the chart? Because it was a combination of two supports, short-term uptrend line, but also on a weekly chart you can see that this line is very important, and actually the price breaking $1,300 per ounce will be a long-term buy signal for gold. Okay, so we had this combination of those three actually supports: horizontal one, dynamic one, and this one. This blue line is not accurate because in such a long term it was few years. In such a long term it can be like $10 higher, $10 lower, so we shouldn't consider this blue line a lot. But it's a cross of black line and a horizontal support. So sellers had a chance for a breakout, they failed. As the old rule says, if the price does not want to go down, it will most probably go up. We're having this kind of a scenario. So with this bounce from this level, another test of $1,300 per ounce is very probable and possible in the same time. Next instrument is QE. QE is underperforming today because of this information that government of New Zealand cut growth forecasts. Here we do have a very interesting situation on a weekly chart. Because we had a huge downswing from 2014 to 2015, and now we're just having kind of a correction, and this correction aimed a 50% Fibo in September last year. Now we kind of went higher, but the price couldn't hold this level, so we actually bounced for the second time from 50% Fibonacci level. But also we created a false breakout above this horizontal resistance marked with gray color. So it's a double top formation, bouncing of 50% Fibo, creating a false breakout here. That's a negative. And also we do have a head and shoulder formation, left shoulder, head and right shoulder on this H4 chart. With a neckline being this green area around 0.722. And as long as we stay above the sentiment, there is no sell signal, but the price closing somewhere here, that will be a negative, very negative signal, and most probably that will be a trigger for a stronger drop. The potential target for this drop, if we go from here, is almost 300 pips lower, 200, let's say 280 pips lower. If you consider a safe stop loss here, its potential profit is 2 times bigger than a potential loss. If you consider stop loss somewhere else, like for example here, $80 pips, 3-4 times bigger profit than a loss. In this case, that's actually a risk worth taking, definitely. American dollar to Canadian dollar. Yesterday we had the data from Canada. This is the result. After that the price went a little bit higher, but in general the price making lower highs and lower lows, which is typical for a downtrend. And this downtrend should continue. Euro to Japanese yen is doing as expected, so after those two hammers the price is a little bit higher. It's a sideways trend though, so we shouldn't get too excited about that. And the price started to create kind of a pennant. So we should see soon. We should see the breakout soon from this pennant, which will set the direction for the midterm trend. American dollar to Canadian dollar. As I told you, the buy signal from this bullish engulfing is no longer here. And actually, since this bullish engulfing was created, you can see it was created here. We are having just a sideways trend. So the price didn't change much here. That's just a boring sideways trend. Let me just readjust the situation so we can remove this. Let me adjust that for the current situation here. That's a nice horizontal support. That's a horizontal resistance. As long as we stay between those two lines, the sentiment remains neutral. And we are just waiting for a breakout here. American dollar, Australian dollar to American dollar. Here is a horizontal support. Situation is not very interesting. As long as we stay above the gray area, the sentiment is positive, and that would be it. American dollar to Mexican peso. That information about NAFTA triggered a reversal here, so Mexican peso is weaker. We are aiming the long-term downtrend line, another long-term from March. We are aiming this trend line again. As long as we stay below the trend line, the sentiment is negative, but the chances for a final breakout increases because we can see that there is no real willingness to go lower. Right, so the price is still relatively high and is keeping this pressure on this resistance, which may indicate a possible. We talked about gold, now silver. Silver is not performing so good as gold. It's mostly a sideways trend here, but we are still above $16.8 per ounce, which is this yellow rectangle here. And as long as we stay above this yellow rectangle, the sentiment is definitely positive, and the chances that we'll aim for this downtrend line are relatively high, especially with that retracements that price was making here, here, here. And American dollar to Japanese yen, we can currently see this retracement from the American dollar here. And with this sentiment, we should test those recent lows again. We defended that level 3 times, here, 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 but this time may be different. We can see that gravity here is quite big. This level is seducing the price. We do have 40 pips to that area, and price closing below those lows, below those tails, but the price closing, not a tail. So intraday breakout should not be significant. Price closing below those tails will be a strong sell signal. American dollar to euro to American dollar. After the sideways trend yesterday, the price decided to go up, and most probable scenario here is another test of this horizontal resistance on 1.1830. So this level we do have about 30 pips, and we should get there soon, I guess. Euro to Australian dollar. That was a good bounce here from the support, V-shaped retracement, no confirmation whatsoever. This yellow rectangle was the false breakout above that resistance. This resistance, actually a support now, is still in place because we can see that it was respected even recently, even yesterday. Sentiment is positive again. The price is back above that line, which says the sentiment is a positive one. British pound to Japanese yen. That's a negative one. The chances that we'll get to this horizontal support here, marked with yellow color, are very high. To this level we do have 300 pips. And we should get there. As you can see, British pound is really weak. We are on the lowest levels on British pound to Japanese yen since 15th of June. And despite weaker dollar, cable is not climbing higher, so British pound is really in a very bad shape right now. New Zealand dollar to Japanese yen. That was a good one. I hoped you used that yesterday. Because we marked yesterday that horizontal support here, and there was a breakout from this triangle, and we said that okay, breakout fair enough, but you need to see a breakout of the horizontal support first to go short, and that actually happened. Here, and after that the price just went lower, 60 pips, without any hesitation, without any local correction. So that was a good one. Now watch out for a potential reversal, because we are on a trend line. We are on a trend line, which for buyers it's a good place to buy. For sellers it's a good place to take profit, especially that they didn't have any correction on their way here. On the H4 chart, we have 5 bearish candles in a row, so 20 hours of constant drop without a break. So it's kind of a good place to have a break here. This trend line, respected in a great accuracy. Touched once, reversal, touched once, reversal, touched once, reversal. So watch out for a potential reversal on New Zealand dollar to Japanese yen. American dollar to Polish zloty, still in attractive trading in a sideways trend, waiting for a breakout from this range, tight range, between 366 and 361. Dollar index after a better session yesterday, today is denying this movement, is coming back below the lower line of the flag. But the real sell, it's kind of a flag, right? The real sell signal here will be triggered once the price will get below the yellow area. That will be the strong sell signal here, especially that we will have a left shoulder head and a right shoulder formation here. WTI oil waiting in a sideways trend. Today we do have a data. On Wednesday, EIA crude oil stocks should change in 2 hours, which should influence the oil. We don't have any news from the OPEC, apart from the fact that the second half of the September we will have a OPEC meeting, maybe in Vienna. Maybe we'll have some revelations there. But in general, the price making in the midterm, the price making lower highs and lower lows. So if we follow the trend, if we do believe that trend should be continued, I think that's the next scenario. So the Next scenario for me for oil is the price making new lower low, but obviously we will be influenced by the data about from EIA about crude oil stock exchange. And DAX also had a nice session yesterday, but it's having a reversal now. This reversal is not happening in a random place because we are fighting to break the upper line of this wedge formation. They failed. Even if they would succeed, that wouldn't trigger a buy signal here, because in my opinion only triggering the red resistance here can trigger a buy signal. That's 12,300 points. Even a breakout here should not trigger buy signal, but breakout of the green of the red resistance should be very positive, should be perceived positive, and has a potential to trigger a major buy signal on DAX. As long as we stay below this level, the sentiment is negative, because the price is making lower lows and lower highs since the end of June. Last one is euro to British pound is heading vastly higher, climbing. We actually broke the upper line of the channel up formation, which does not happen very often, and when it happens, it's a sign of a huge strength. Actually, to the local long-term highs, how much do we have? We have 100 pips, which is not so much. And if we break this, we will be on the highest levels since 2009, which is pretty significant. So euro is very close to be on 8 years highs, which is pretty significant if you ask me. Let's see this 4 from the trading sniper video. What's happening here? So very weak pound is trying to defend the now or never support. On indexes, this is S&P 500. We do have correction of this yesterday optimism, which was widely seen across the globe. Gold is trying to make made new daily highs, but defended the neckline, and now the most probable scenario is a test of $1,300 per ounce again. And Kiwi, if Kiwi will end the day below the green area, that will be a long-term sell signal with a good risk to reward ratio. Now we will have a short break. After that there will be a webinar about fundamental analysis. I hope that you all will be there, that you all will join. So now a short break, and remember, if you want more information, more trading opportunities, you have to visit our Twitter account and our website alpari.news.